All right, today we're going to crack open one of Canada's most powerful and honestly most underused savings tools. We're talking about the Registered Disability Savings Plan, or as you'll hear me call it, the RDSP. It's a huge question, right? For so many Canadian families, trying to plan for the long term can feel, well, pretty daunting. But what if I told you there's a government plan specifically designed to help you do just that?
Now, take a look at this number. What if I told you this could be the key to that long-term security?
Yup, that's right, up to $90,000 in direct government support. It's on the table for eligible Canadians, all through the RDSP. So let's dive in and figure out exactly how this thing works. Okay, so first things first, let's cover the fundamentals. What exactly is the RDSP? And more importantly, who is it for? Think of the RDSP as a special long-term savings plan. It's specifically for Canadians who have been approved for something called the Disability Tax Credit. It's really like a dedicated savings foundation for the future, and it's built with a ton of government help.
So, to be the beneficiary of the plan, you've got to meet these 4 criteria. You need a valid SIN, you have to be a resident of Canada, and you need to be under 60. But the absolute most important one, the key that unlocks this whole thing, is being approved for the Disability Tax Credit.
Okay, now for the part that gets really exciting. This isn't just a place to park your money. No way. This is a plan that the government actively helps you grow. Let's see how they do it. The government boosts an RDSP in 2 totally different ways. You've got the Canada Disability Savings Grant, which actually matches the money you put in, and then you have the Canada Disability Savings Bond, which is designed for folks with lower incomes. It's really important to get the difference here. The grant is all about matching. You contribute, they contribute. Simple. The bond, though, that's based on your income, and you don't have to put in a single penny of your own money to get it. And this is what makes the RDSP just so incredible. A 300% match. I mean, seriously, that is one of the most generous government savings incentives you will find, period. It's an amazing way to put your savings on the fast track. Let's just see what that looks like. You put in $500, and depending on your income, the government can come in and add $1,500 on top of it. Your investment is literally quadrupled right out of the gate. Here's how that match breaks down. You see, it's tied to income, so if the beneficiary's family net income is below that first threshold, you get that awesome 300% match on your first $500 and then a 200% match on the next $1,000. But even for higher incomes, you still get a 100% match on your first $1,000. It's a win-win. And this isn't a one-time thing. Over the entire life of the plan, the government can contribute up to $70,000 in just these matching grants. That's a massive boost to your savings potential. And hey, let's not forget the bond. This is so crucial. For lower-income Canadians, the government will deposit up to $1,000 directly into the RDSP every year, even if you can't afford to contribute anything yourself. Now, the lifetime max for that bond is $20,000. So you add that to the $70,000 in potential grants, and there you have it. That's how we get to up to $90,000 in total government support. Okay, so whenever you're talking about benefits this generous, you know there are going to be some rules you need to know. So let's walk through the fine print together. First up, putting money in. There's a lifetime limit of $200,000. You can keep contributing until the beneficiary turns 59. And what's really cool is that pretty much anyone, parents, grandparents, a friend, can contribute, as long as they have permission. Just remember, this isn't like an RRSP. You don't get a tax deduction for your contributions. Now check this out. This is a fantastic feature called the carry forward rule. Let's use Roger as an example. He got his DTC eligibility way back in 2014, but he only just opened his RDSP this year. The plan actually lets him go back up to 10 years and claim all the government grants and bonds he missed out on. It's an incredibly powerful way to play catch-up. Okay, now let's talk about taking money out. You have to understand this one key idea, the assistance holdback amount. Now, don't let the name scare you. It's just the total amount of government money, grants, and bonds that went into the plan over the last 10 years. It's basically a rule to make sure the RDSP is used for long-term savings, which is its whole point. Now, the rules for withdrawing used to be, frankly, really strict. Before 2014, you could take out $1 and be forced to repay all the government money from the last decade. But thankfully, the new rule is so much more flexible.
Now, for every dollar you take out, you only have to repay $3 from that holdback amount. This change was a real game changer. It made the plan way more user-friendly. So, feeling like this might be the right move? I hope so, because getting your own RDSP started is way more straightforward than you might think. Here's your simple 3-step action plan.
It honestly just boils down to these 3 things. Step 1, and I can't say this enough, is to apply for and get approved for the disability tax credit. It is the absolute key. Step 2, find a bank or credit union that offers RDSPs. And step 3, open the plan, start contributing what you can, and watch that government support start to roll in.
Okay, one final really important point on taxes. We said your contributions aren't tax deductible when they go in, but the good news is when you take that same money out down the road, it comes out completely tax-free. You'll only pay income tax on the extra stuff, the government grants, the bonds, and any investment growth the plan made over the years. So we've covered a lot, but really it all comes back to this one thing. The government has built an incredibly powerful tool to help Canadians with disabilities build real financial security. So with up to $90,000 in support just sitting there, waiting, the real question is, can you afford not to look into it?